Welcome to the Stocks channel. My name is Cory and this is going to be your daily stock market update. Gold and Bitcoin are breaking out to the upside and stocks are still being volatile. First up, we're going to take a look at the SP 500 and we're looking at the SPY ETF. So please remember to like and subscribe, and let's go ahead and crack open this chart and see what's going on in the stock market today. Alright, so with today's price action on the SPY ETF, we can see we had another volatile day and we did close a little bit lower than where we opened, even though we were trading most of the day above the opening price. So to really see what's going on, let's go ahead and switch over to a 1 hour chart, and we can see that the sell-off came in a big way in the last 1 hour of trading, where we had an absolute bearish engulfing candle and a flush of today's price. Now there is still a silver lining in the price action, and you can see it here on the 1 hour chart, is that we are starting to build a base and we're not really forming significant lower lows like we were forming in this ABC correction. You can see that these lows are starting to build this sort of base here, and this could be a base for the bulls to build on, and we could start heading higher from here. However, with price action, we never want to assume where the price is going to go, and we could just as easily break out of this base to the downside and form yet again another lower low, which would continue the correction that we're seeing right now. Now, there is one reason to be bullish on this pattern, and if we zoom out, we can see that we are forming somewhat of a bull flag here, and we're going down in this really nice channel, which is indicative of a bull flag movement. So typically after a bull flag, we would expect to see a breakout to the upside, and we would continue that pattern. So it is something to keep an eye on, and if we do start breaking down to new lower lows, we will have to start looking at the fact that that bullish trend could be snapping. So going back to the daily chart, we can see we still have a bullish trend because the 5 EMA is still trading above the 13 EMA. So that's evidence of our short-term bull trend, and our medium-term bull trend is also still intact because we have that positive sloping 20 simple moving average. Now the price action has not yet tested the 20 simple moving average, but we do know that that level could act as support. But right now we did bounce off of the 0.382 Fibonacci retracement level at $341. And we're still holding up above that support level, which is good news for the bulls. So we still have the benefit of a short-term bullish trend, and we still have the benefit of a medium-term bullish trend. Now the price action is closing below the 5 EMA and the 13 EMA, so we do need to acknowledge that the price action is trending in the wrong direction. So the price action continuing to close lower, and if we do get a close below the price target of 341, that will start snapping that short-term bullish trend. But right now it's still intact, and we want to see the price action make a break of this resistance trend line, and with tomorrow's price that will be somewhere around $346. Now that trend line goes down about 50 cents per day, so it is something to keep an eye on. If we could break out above this resistance trend line, we will start heading back to our price target of $350. If we break 350, don't forget the next level is right around 355, and that's going into that very strong resistance trend line level that we have around $354 and $355. So it's not over for the bulls yet. They're still making a stand, and they're still keeping the price above this very important Fibonacci retracement level, and we still have those bullish trends intact. So if you're a follower of the Stocks channel, you know the trend is our friend and we don't go against the trend. So as long as we have this bullish trend, which we do, we want to be buyers off of support levels. Now, it doesn't mean we want to be reckless and go all in, and we still want to have stop losses below our support level. So right now, we're buyers at the support level of 341, and we want to control this position and not panic sell until we see if the price action is going to break below support. We could equally get a break to the upside, and we could make a nice profit off of this trade, and we don't want to panic sell just because the price is consolidating. Now the good news with the volatility is a lot of the volatility is giving you an opportunity to trade. So if you want to get more into the trading, volatility is your friend, and you can scalp positions intraday with all of the price swings that we're getting. Just control your risk and make sure you're setting stop losses below the support level at $341. So technically speaking, there's nothing broken about this bullish trend yet, and we still have some time on the clock for this 5 EMA to continue to cool off and still remain above that 13 EMA. You can also see down here there's nothing unusual about the volume, and we're not getting a huge sell-off on higher volume. So that tells us that there's not a lot of big money dumping their positions, and if the big money is not selling, the stock market doesn't have a lot more downside left. The other thing to note is there's still bearish sentiment in this market, and there's still a lot of investors that are scared to put their money in the market, which means there is cash on the sidelines. Typically speaking, people that short the market are not going to try to short the market when there's a lot of people that have a cash position, because they could easily get short squeezed if they get too aggressive on that short side. There's a lot of cash that can come in and drive the market higher, which would squeeze the shorts out of their positions, and they would have a big loss. So you can see the market is being volatile, but it's still forming that base right around support, and we're really not going below this level in a meaningful way. So if you're bullish, just watch that 341 level. That's going to be the most critical support level. And if you're bearish, you really don't want to try to short this market unless we get a break below these critical support levels. And in my opinion, shorting is a very difficult thing to do, and even the pros have trouble shorting this market because it's been so irrational and it's been going up way more than you would realize. So I don't recommend shorting this market, and I definitely don't recommend shorting as long as we're holding up above this $341 level. So next up, let's take a look at the Nasdaq 100, and we're looking at the QQQ ETF. And we see the Nasdaq 100 also had volatility today and did close below the 13 EMA. The short-term bull trend is still intact because we see that 5 EMA is still trading above the 13 EMA, and we still have that positive sloping 20 simple moving average. So going over to a 1 hour chart, you can see the Nasdaq 100 is also forming a nice base here for the bulls to build on. And as long as we don't get a break below this level at $284, the bulls will have this support level to build off of, and they can make an attempt at breaking out of this resistance trend line. So if we can get a close above $287, there's a lot of room to run for the Nasdaq 100 bulls because there won't be a lot of resistance above this resistance trend line. If I zoom out here, you can see we're also forming this bullish flag pattern, and we are in a downward trending channel. So if we can break out of this downward trending channel to the upside, there's a lot of room to run for the bulls. But don't forget, for the bears, if they're able to break out to the downside, it's equally likely that we could start seeing more selling. But right now, as long as we can hold up above these critical support levels, you can tell there's not a lot of bears in this market because the price action is actually stabilizing at these levels. So going back to the daily chart, watch for that break of the resistance trend line if you're bullish, and if you're a bear, you really want to see a close on the Nasdaq 100 below the 20 simple moving average, and you want to watch for a trend shift. So remember, on the Nasdaq 100, you want to watch the 5 EMA cross below the 13 EMA, and that'll signal that the short-term bull trend is coming to an end and we could start trending downward. But right now, that 5 EMA is still on the bull side, trading above the 13 EMA. So we're going to remain bullish on this market. You can also see that we're holding up above the 0.382 Fibonacci retracement level at $283. So that's a great level for the bulls to hold, and if we break below that level, it would be a bearish sign. Next up is the Dow Jones, and we're looking at the DIA ETF, and we see the Dow Jones also forming a base right around $282. Now on the Dow Jones, we did not even retrace back down to the 0.382 Fibonacci retracement level at 280, and we're still trading above the 20 simple moving average. You can see the trend is still bullish because the 5 EMA is above the 13, and we have a positive sloping 20 simple moving average. So while we are seeing volatility and we're not seeing the price action move to the upside in a big, meaningful way, we're still seeing the bullish trends remaining intact, and therefore we're going to remain bullish on the stock market. We see the trends bullish on the Nasdaq 100, the SP 500, and the Dow Jones, and we have a very similar story where we're really just waiting for the bulls to start buying up the dip and driving the prices higher, or we're waiting to see if the bears are going to come in and try to short this market in any meaningful way. But right now, you're not seeing the volume on selling, which could be an indication that the market is just at a pause and waiting to see what's going to happen before deciding which direction it wants to go. So when we have uncertain times, you either want to do nothing and sit on cash, or you want to stick with the trend, and right now, the trend is still bullish. Next up is the VIX, which is our fear indicator, and we know the VIX is giving us a lot of signs that we need to be paying attention to. So when the VIX is at these elevated levels, we know there's going to be volatility in the market, and that's exactly what we've been seeing with all of the volatile sell-offs near the end of the close. Now remember though, on the VIX, we're really not going to get bearish on the market unless the VIX starts closing above 29.6. We do have bullish trending going on in the VIX, and we do have bullish price action, but if the VIX can't close above this resistance level, then we're not expecting to see a really big sell-off unless the VIX can get into the 30s yet again. Now, if the VIX does close into the 30s, we're likely to see a big sell-off, but as you can tell from this chart, the VIX has yet to close above the $30 level. So right now on the VIX, we're really just waiting to see if it's going to close above this 29.6 level, or if we're going to start trending back down to the downside, and that means fear is leaving the market, and we would expect to see the stock market start grinding higher. So usually the VIX goes higher when the stock market goes lower, and we saw the stock market close lower on a day that the VIX went lower. So we're not really seeing a lot of fear that you would expect to see at these VIX levels, and I think that's just because of everything going on around us right now. There's just a lot of people protecting their capital and hedging their positions. So don't be too concerned about the elevated VIX unless we start getting closes above that 29.6 level. So let's go ahead and check in on the sectors driving the stock market, and the first sector is the financial sector. So on the financials, you can see that 20 simple moving average is getting closer and closer to crossing above the 50 EMA, and that will signal a strengthening medium-term bull trend. The 20 simple moving average is positive sloping, and it's about to cross over the 50, which is a bullish crossover. The 5 EMA is still hanging on, trading above the 13 EMA, and the price action is still holding up above the 20 simple moving average. So right now, I'm looking for financials to continue to the bullish side, and it looks like we're going to be finding support somewhere around the 50 EMA or the 20 simple moving average. And because of the bullish trend, I think we would expect to see a bounce there and a continuation to the upside. If we start closing below the 50 EMA and the 20 simple moving average, we will also have a short-term bear trend because that 5 EMA will cross to the downside, and that will be a warning sign that the S&P 500 could start heading lower. So the financial sector is definitely at an inflection area where we could see it go either direction, but we have to give the short-term benefit to the bulls because we have that aggressive positive sloping 20 simple moving average that is about to make a bullish crossover. Next up is the industrial sector, and we see industrials going down -1% today and closing below the 5 EMA. Now the industrials have by far been the strongest sector, and you can see we never really had a sell-off in the industrials like we did in the rest of the stock market. So we still have very bullish trending. You can see all of the moving averages are very far separated apart and trending strongly to the bull side. So as long as the price action can hold up above that 20 simple moving average, we could continue to see buyers in industrials, and we're looking for a new higher high at the $83 level for the industrial sector. So yeah, -1% isn't the best day, but we still have strong bullish trending, and we're looking for the bulls to buy off these support levels and continue to drive the industrials higher. Next up is the healthcare sector, and we do see bearish price action on the healthcare sector closing down below the 20 simple moving average. And we also see a bearish trend developing because the 5 EMA has now crossed below the 13 EMA. So if we see more selling in healthcare, we could get a close below the 50 EMA, which would mean we're now getting bearish price action under all of the moving averages, and we could start to see that 20 simple moving average rolling over. So healthcare is by far looking the weakest of all of the sectors. So we would want to see strength come back to the healthcare sector soon if we expect to see the S&P 500 continue to go higher. So right now the financials are looking like they could be in trouble. The industrials are looking the strongest, and the healthcare sector is by far looking the weakest. And we really would want to see strength in all three of these sectors if we're expecting to see the stock market go to new all-time highs. Next up is the US dollar, and we're looking at DXY, and we see the US dollar dumping today, closing back down below the lower Bollinger Band. You can see the bearish trend is strengthening because the 5 EMA is breaking down to the downside and separating from the 13 EMA. And you can now see that the 20 simple moving average is strongly trending to the downside. So the US dollar is definitely going into a continuation of this bear market, which we had a long-term sell-off on the dollar and a short-term bounce. And it looks like the bear market is back, and we're going to continue to head lower. So the US dollar did go lower on a day that the stock market also went lower. So we're starting to see a disconnect between the inverse relationship. And I'm not sure the dollar going lower necessarily means that the stock market has to go higher anymore. However, with a weaker dollar, you would expect to see asset prices continue to inflate. So it is a possibility that the weakening dollar is bullish for the stock market and other markets like gold and Bitcoin. So with that being said, let's jump over to gold, and we see that gold finally did get a breakout above our resistance level at 1900 today, and it did have a very nice bullish candle. Now we still have to form a higher high on the daily chart, which is a break above 1930, and it would be nice to see gold come back down and test that previous resistance as support and get a confirmation bounce, and we would like to be a buyer off of the support level. Now gold did do an important breakout to the upside after this consolidation that we were in, so it is equally likely that we would want to buy into gold now and maybe just add to our position if we get a bounce off of support. At this point, this trend line has been holding up really nicely in the support trend line you see here. So if you're a buyer of gold, I would set a stop loss below the trend line because that trend line has been holding up as support. It's very unlikely that you will get stopped out of your position if we continue into a bullish trend. So gold's looking good, and the next step for gold would be to come out here and break out above 1930 and form a new daily higher high. And if we break out above 1930, we could come back down and test that level as support. And we would also want to be a buyer at that level. So gold's looking good, and we're finally getting a confirmation of the move that we wanted to see after waiting and watching. And now we're finally starting to see what kind of positions we want to make on gold. So next up, let's take a look at Bitcoin. And as you can see, we have a huge influx of volume today on a giant bullish candle. And we did finally break out above our resistance level at 12,000. So we went from 12,000 breakout almost immediately to 13,000. And that's what we were expecting. Once we broke through that resistance level, it should be a quick move to 14,000. And we're seeing Bitcoin going up $1,000 in one day on a huge influx of volume. So when you see volume this bullish and you see price action this bullish, especially on Bitcoin, it's very likely that it could go parabolic and start running. So I wouldn't chase Bitcoin if you're not already in it, but don't forget we had buying opportunities down here when we tested that breakout as support. And we had another buying opportunity here when we bounced off the 13 EMA with that strengthening bull trend. So you really want to pay attention to when bull trends are strengthening. And when you start developing a strong bull trend, you really want to look for opportunities to buy off support and then just be patient and let your money go to work for you. You can see if you were a buyer of Bitcoin off of these support levels and you were just patient, it's really paying off in a big way now. Next up, let's take a look at Apple, which is our market moving stock. And we see Apple still holding up right above that 20 simple moving average. That 5 EMA is getting dangerously close to crossing below the 13 EMA, but we still do have that short-term bull trend. And we still do have that medium-term bull trend on Apple. So it looks like the Apple bulls are buying the dip right around the 20 simple moving average because it's continuing to hold up as support, and that's a positive sign for the bulls. Now, if Apple starts to break down below, we still have the 50 EMA and this support trend line that could act as support. And don't forget about the 0.5 Fibonacci retracement at $114. Now, if Apple starts bouncing from here, our upside price targets are $127. And if we break that, our next price target is $130. Next up is Tesla. And Tesla did report earnings after the bell, and it looks like it is up post-market. So it looks like the bulls don't have anything to worry about just yet because we were starting to get a little bit of scare with the Tesla price action closing below the 20 simple moving average. And we saw the 5 EMA crossing below the 13 EMA. Now, a good earnings could absolutely reverse that, and we could start to see the Tesla bulls come back in tomorrow. But right now, I would be patient and just watch and wait the price action. And let's see if earnings was good enough to reverse this bearish trend that we're starting to see. And if it is, we still remain our price target at the $503 level. Don't forget, that's a test of the previous all-time high, and we could find resistance at that level. And we could go up to that level, bounce off, test support, and get another attempt at that level. So going back to the SP 500, you can see the stock market is still volatile, and we still do have bullish trending on a lot of the market right now. Now, some of the sectors are starting to weaken, and we see financials and healthcare looking a little weak right now. But with a balanced short term, we could reverse those bearish signs and we could start heading back higher very soon. But you want to manage your risk very closely, and don't forget to set tight stop losses because there is a lot of volatility in this market, especially if we see the VIX start closing above 30. Don't forget, sometimes when you're not sure what to do, the best thing is to do nothing and just watch and wait until the trend reveals itself, and then we can make a more clear decision once we see more data. And watch those critical support levels. So please smash that like button on this video to help me out. I really hope these videos are helping you out. And if you haven't already, go ahead and subscribe so you can follow along with all of my daily updates. Thanks for watching, everybody. Good luck out there. And as always, I will see you in the next episode.